and welcome to another episode of Africa Business Weekly, where we take you on a journey to the world of business across sub-Saharan Africa. I'm Akion Bakeye. This week, more global reactions trail Nigeria's presidential polls as Moody's says the legal challenges to the election outcome may trigger negative credit ratings. From there, we shift our focus to East Africa as Randa Air is set to expand its cargo operations in Africa and the Middle East. But let's begin this week's highlights from South Africa with Palesa. Hello, Palesa.
To kick off our Pan-African coverage, we focus on the global growth trajectory for 2023. David Rees, who is the senior emerging market economist at Schroders, highlighted that China's recovery could signal the beginning of a global economic recovery. For more, let's listen in.
Stronger growth in China automatically lifts global growth because it's big. China's big, but it's not a big source of final demand. It has big trade surpluses, and it has done for a long time. So, small Asian economies like Thailand, they're going to see Chinese holiday makers come back. They're going to do really well, but they're a tiny part of the global economy. And so it's not as though China is going to bail out the US or bail out Europe with a services economy. Historically, when they've helped those economies, have been kind of manufacturing, investment, commodities, or those kind of things, and probably that will be less supportive this time.
Now, let's talk about the UK. You were less optimistic, or let's say more pessimistic with regards to the UK. So how are you viewing the UK at the moment?
Well, so if you think about problems in the world economy, you've got shortages of labour in most major economies, which are, causing the labour market to be pretty hot, wages to rise. The UK's got that, but they're easing to some extent in other markets. The UK's got the energy crisis. Prices are still going to be going up, whereas in Europe they're down, and that's helping economies there recover. And then we've got Brexit and the trade problems, and then we've got the government pushing through austerity and, really dampening it down on the fiscal side. So it's kind of a perfect storm of negative issues for the economy. And so the UK is the one that we think it will contract about 1% this year and underperform every other major economy.
In recession?
Absolutely, yeah, we're probably already in it.
Probably already in it. Okay, so then taking all of this together and looking at South Africa specifically, how are you viewing the South African economy?
Well, as I said, South Africa is a pretty good example of what's going on in a lot of emerging markets. Inflation has been very high, which has forced interest rates up. We're at 7.25% now for the SAR, but we finally caught up to headline inflation, so that's a positive. Those rate hikes are going to weigh on the economy with a lag. It's about 9 months, I think, by my reckoning. So first half of this year, you're going to have that negative headwind from higher interest rates. I think the good news is, though, that most of our leads suggest that inflation is going to come down quite significantly. Energy-related inflation is coming down, fuel. And food, which has been surprising a bit, that looks like it will start to come down quite sharply as well. So that will relieve some of the pressure on real incomes, from inflation. And then once inflation starts to come down, the economy is weak, then we could think about rate cuts. So that would brighten the outlook for the economy next year.
During President Yoweri Museveni's first state visit to South Africa in more than a decade, we met Nelson Tugume, who is the CEO and chairman of the Coffee Investment Consortium Uganda. Cost reduction during the accelerated inflation era and sustainability in the coffee market topped his concerns. For more, he spoke to my colleague Godfrey Mutizwa. Let's listen in.
For our current research, is that South Africans are taking over 80 million cups of coffee every day. And the unfortunate bit of it is that even when we say that Africa is rising, the unfortunate bit of it is that Uganda, being the #1 producer of coffee in Africa, we only have 4% market share. Isn't that the unfortunate bit of it? And I know you have also the Ugandan bean, but through other routes or a middleman. Your coffee first goes to Europe and comes here, and therefore you don't still get it in the original form. But right now we are here, especially when you talk about the FCTA, that we can now start trading with South Africa direct.
Yeah, so tell me, what is the problem?
The problem, one, is that coffee at the country level, at the production level, it's been a lot emphasized at the green bean. And if I want to put it in perspective, is that the total value of coffee around the world is over $460 billion. But let me say this, only 26 goes to the producer countries, and that is your Brazil, Colombia, Nicaragua, Honduras, Peru, Uganda, Kenya, Burundi, Tanzania. So I think that's the unfortunate bit of it. And what that means that the sustainability of getting the coffee to the farmer is where now we got to deal with, because it's a challenge. The big value goes to the consumer and the producer is not getting anything. I know what it means to go to school with our shoes. I'm a second generation coffee farmer. And not because even actually we don't have shoes in my home, but my mother used to make sure I don't go to school with her shoes because I must look like those other children. And this was simply because as a coffee farmer, you're not getting enough money.
You're not benefiting because the bulk of the value is deriving to middlemen. Now, I want to ask you, whose fault is it? Is it the government? Is it you?
I could say we both to fault, both the public and private sector. But mainly a lot, I want also to say, governments, this is a time to start trading. African governments, this is a time to start signing deals to each other and say, we're going to take and have a deliberate and intentional framework on how Ugandan coffee can come direct to the South African market. I can tell you one thing, Ugandan coffee, with the birth of the Robustas, if you didn't know that.
I do.
So now you know. So the birth of Robustas, we the benchmark of all the Robustas in the world. Our Robustas are not only used for drinking, but they used to blend all the Robustas in the world. You get the cheap coffees, and then get the Ugandan bean, and make sure you go to a certain level. So what does this mean? That me as a farmer from my little village in Rashamir and Tungamo will not come to the South African big boys and think I'm going to be on the shelf.
And that's all from me for now. It's back to you.
Thanks there for the updates, Palesa. From South Africa now, let's move over to the east of the continent with Sarah Murungri. Hello, Sarah.
Thank you, Akin. In November last year, Randa took delivery of its first dedicated cargo aircraft as it looks to expand its cargo operation in Africa and the Middle East. CNBC Africa's Eugene Anangwe spoke exclusively to the CEO of Randa's national carrier on this and more.
Randa is the growth of the cargo revenue stream right through the pandemic as well. We've been transporting cargo in the belly of our aircrafts, especially the wide-body aircrafts, and we've seen even through the pandemic the volumes growing double digits. We've seen exports in Rwanda shooting up almost over 1,000% between 2017 and now. So there's a great demand for cargo capacity. Especially for fresh produce that's being exported from Rwanda. So we export a lot of cut flowers, vegetables, avocados, chilies to the UAE, Brussels and London. So we needed a cargo freighter to supplement our current belly capacity. So that's what informed it. And going forward, we believe cargo will be a very, very strong revenue stream. We're putting a lot of focus on that. As Randa, we've just taken over the management of the cargo warehouse here at the airport. So there's a lot of potential, not only with Randa, but also for a lot of other airlines in terms of cargo.
When you sit in the boardroom meetings or to reevaluate this decision, I mean, does it scare you? Do you regret taking that route in terms of the numbers? What are we seeing so far in terms of return on investment?
It's still early, but as I mentioned, we're seeing a lot of demand, especially on the outbound. We've been focusing a lot on the UAE route with the cargo freighter. We're seeing the volumes before the cargo freighter came in, and now it's grown to the volumes have grown by over 15%. But that's the freighter together with the A330 carrying the produce. So no regrets. We believe that having the capacity, when you build it, they will come. For the exporters, it'll encourage them to produce even more. And for the importers as well, to let them know that we do have a lot of capacity on the freighter, that they should take advantage of that.
Right. So when you say 15% growth, it's 15% from what to what?
Okay, just to give you an example, in October to the UAE market, we transported over 135 tons of fresh produce. What we're seeing in February is over 220 tons of produce. So we are seeing a significant increase in terms of the uplift of exports.
Yeah, the cargo plane must be feeling very lonely. Being the only one around. When does it get its siblings? When do you build up the fleet?
We will definitely continue building the fleet. As demand grows, we are looking at acquiring additional freighters down the road.
Right. No timelines?
No exact timelines right now, but it is in the plan.
It is in the plan.
Yes.
Right. Today, Rwanda is actually able to access 17 African countries, if I'm not wrong, under the recently launched Single African Air Transport Market Pilot Program. I want to talk to us a bit about what you think needs to be done to ensure that we fast track the realization of the aspirations of the African Union to advance the liberalization of the civil aviation in Africa. What needs to be done?
Well, in terms of SATM, the Single African Air Transport Market, that's really the key in unlocking connectivity within the African continent. It's unfortunate that only 35 countries out of the 54 in the continent are signatories to this. I'm happy that we're starting with the coalition of the willing, so to speak, the ones who are ready to go, the 17. But it is important that we have everybody on board because without open skies, if we continue operating with these restrictive bilateral air service agreements that we have, we'll never get to where we need to get to in terms of aviation in our continent. This is a continent that has a lot of potential. We're talking about 1.4 billion people in the continent, but it accounts for 2% of global aviation, which is a shame. And given the fact that road connectivity is really difficult for a lot of countries, and there's very limited rail transport, aviation is really the answer. And again, in the context of the African Continental Free Trade Area, it's really imperative that we remove all these barriers so that we can easily connect our countries and give our citizens an opportunity to move across different countries.
Yeah. Despite efforts by African governments to ensure universal healthcare coverage, 60% of people on the continent still have no access to healthcare. Earlier, the group CEO of Amref Health Africa, Dr. Githinji Gitahi, spoke to CNBC Africa's Tessie Cavan on the current state of universal health coverage in Africa.
Yeah, universal health coverage, it has basically, you're talking about a few dimensions. One of them is being access to needed health services, so which can be defined, and you can define them as wide as you want. And secondly is to whom are they available? Is it to everybody? And third is who is paying for them. The real optimal UHC is where all services that are needed are available. They're of quality, meaning they can meet the needs of the people. They're accessible to all the people in the country, and they're accessible at zero costs. That's ideally the dimensions. But we know that in the continent of Africa, probably only 40% of people in the entire continent of 1.3 billion people have access to health services. So you're saying that 60% of people don't have access to health services. Number two is that a lot of this access is driven by people paying for themselves. So what you've seen in the recent Global Monitoring Report on UHC is that whereas access to health services is increasing, out-of-pocket expenditure, which is the measure of how much people are putting, has been increasing, meaning that the access is increasing at the cost of people. What then that means is that because people are spending more of their money on health, they're resulting in impoverishment. Let me just give you a quick number. Africans spend 52% of their household income on food, 52%. So they're left with 48 to save, to educate their children, to do health and all these things. Because health is something that you can't plan for. You can plan for school, you can't plan for health. Health in Africa, people spend almost 4% of their income on health, which is really high. If you look at countries in Europe and elsewhere, they spend 1% or less. So Africans actually carry a bigger burden of health than in other countries. What this does is that people cannot save, people cannot actually develop wealth, And about 15 million Africans fall into poverty every year because of health costs. So it is a long way for us to achieve this. We know that for you to even provide a basic package of health services, the estimates say, there's no magic number, but say at least $100 per person per year on average. But some countries are spending $17. Other countries are spending, maybe those doing well, $40, $45. It's only the countries like Seychelles, Mauritius that have a much robust economy, smaller population, that are much higher. But on average, sub-Saharan Africa, you're talking about $50 per capita, which is way off where we should be spending to achieve universal health coverage.
Staggering numbers you've given us, Dr. Gipinji, and I do know that there are measures that have been taken to help African countries achieve universal health coverage. But what are the challenges? I think that would be my next question. What is making us not get there?
So the challenges are several. The first challenge is our approach to healthcare. I would say here, and we are discussing this at this summit, that the African health system is set up to address biomedical challenges. It is set up to be hospital-based, set up to be medication-based, set up to be treatment-based. Whereas actually, the communities are the ones who make health. It's the communities who make health. It is my mother who gave birth to me and breastfed me that made my health. It wasn't a hospital. Now, because of this biomedical approach, we are actually underinvesting in creating health, and we are overinvesting in treating disease. Now, that's the first construct. And the reason I'm saying this is because for you to treat disease, you need a lot of money. Disease is very expensive. And Africa doesn't have the money to treat disease. If you look at the economy of Africa, it accounts for probably 3% of the global GDP, but it carries 17% of the global population. So you are using 3% of the world's resources to take care of 17% of the world's people. Therein lies the problem. So if you have to approach it treating them, you'll never catch up.
That's all coming in from the East. It's back to you.
Thanks, Sarah. From the west of the continent now, the world's focus remains on Nigeria's elections outcome, as Moody's Investor Services says the legal challenges to the Nigerian election could trigger negative credit rating for the country because there may be a delay in the formation of a functioning government that can address Nigeria's pressing credit challenges. Lucy Villa, Vice President and Senior Credit Officer at Moody's, shared a perspective on the developments so far.
What is interesting, and to be honest, is not something that is specific to Nigeria. In general, you would have what we call policy inertia just before elections, because a government would not take big decisions, and a bit after. The issue, of course, is that if you're in a situation where you have a government running normal operations as you described it, it's very unlikely that key policy decisions will be made. And as we explained, we think there are strong credit pressure, and in particular fiscal pressure, and that without big policy decisions, this pressure will continue with, of course, some negative impact on the sovereign credit profile.
Yeah, well, you make a good point there. I mean, fiscal decisions still have to be taken. So let's talk about some of them, as you've also highlighted in your note, widening a budget deficit, forex scarcity, and of course, rising borrowing costs, revenue to debt servicing ratio, etc. So talk to us about the picture that you see going forward. We know that this government has President-elect has talked about removing petrol subsidy and, of course, to free up more revenue for the government. There's also talk about ramping up oil production. The NNPC has talked about raising production levels to as high as 2.1 million barrels per day. So that points to more revenue coming in. So how does that change especially the revenue picture for the fiscal authorities?
Sure. So now it's true that when we hear the communication on the part of, the current government, president-elect, but also the administration, the Ministry of Finance, the different institutions, there is a clear understanding of what the issues are. But then, of course, the difficulty is to address them and remove some of the constraints. So you mentioned the biggest constraints stem from oil subsidy. It's very costly. as the budget for 2023 showed very well. Of course, the difficulty is to remove it because a lot of the population in Nigeria benefits from it. And it will increase inflation, of course, because the price of petroleum products would increase. And with that, a lot of households will lose purchasing power. That means trying to adjust their budgets, their own budget, as they could. So we know, we know there is a clear understanding that the oil subsidy is an issue for the budget, but we also know that given the social and economic realities in Nigeria, it's going to be difficult politically and socially to remove it. That's the first constraint. The second constraint, you alluded to it too, it's oil production. It's difficult still today to understand the extent to which some of the factors beyond the drop in oil productions that we saw in 2022, but even before, is structural in nature, and so it may take time to address it. And whether a part of it is maybe more cyclical and can be more dealt with in the short term. We take, I would say, cautious view regarding oil production. And we tend to forecast it rebounding, but certainly not to the level you mentioned. And the last thing I would like to mention is, of course, the background of rising interest rates. The government borrows at higher and higher interest rates. Of course, that has a negative feedback loop on its budget because interest payment is a large portion of the spending in the budget. And then, of course, one of the key policy direction is to try to raise revenue, in particular revenue that doesn't depend on oil and on which the government has control over. But again, that's something that usually takes time to achieve. It's not something that you can increase in 2 to 3 months' time. It's usually more 3-4 years time horizon.
Data by the Food and Agriculture Organization of the United Nations shows that international food commodity prices declined for the 11th consecutive month in February. Now, the question is this reflective in Africa? Ted George, the Chief Narrative Officer at Cleos Advisory, gave some insight into what's at play.
Food prices have been coming down, they've definitely peaked, but it's not really to do with a lot of the kind of foods that people eat in Africa, particularly things like maize and wheat. So internationally, we've seen prices for wheat, for example, falling by almost 50% from their previous peaks, but it's still the case in Africa that food prices are high. Just to give one example, in Ghana, grain prices are still around 150% higher than they were a year ago. And they're the highest they've ever been in countries like Tanzania and Malawi. So we're still not seeing that trickle through yet. And of course, that has a big effect because so much of household income goes on food.
Yeah, because we're seeing high prices on one hand, and then we're also seeing high costs play out as well. But how is that impacting on margins?
Well, enormously so. And I think this is the real kind of difficulty because it depends on the kind of crops you're selling as well. If you're growing locally and you can provide locally as well, you can get good prices. But the difficulty is when you're trading, when there is processing involved, all of the margins are being squeezed because of high energy costs. You know, they affect the use of machinery, they affect transport, refrigeration, all these other things as well. So every cost has a knock-on as well. And that means for farmers or traders or food producers who rely on that margin, it's evaporating, and that's really difficult for livelihoods.
Yeah, because when you look at the continent, there are still some existential threats that we face here, things like flooding and other disruptions that play out, insecurity, transportation costs, all these are all adding up.
Yeah, well, I mean, essentially, it comes down to marketing infrastructure. This is a problem in Nigeria, but all across West Africa. As you said, roads and ports which can function efficiently, sufficient warehouses, the ability to store crops. If you think in Nigeria, the largest producer of tomatoes in Africa, but half of the crop every year rots because it all gets to market at the same time or it doesn't get to market, there's nowhere to store it. And so everything about that infrastructure is critical so you can actually get the most out of the crops. But the broader point you make about weather, flooding, and then, of course, wildfires, droughts. That is a reflection of climate change, and that is the big risk hanging over the entire food sector.
Yeah, because we're also dealing with the challenges of in Ukraine, the Russia-Ukraine crisis there. We've seen how that impacted commodities here throughout last year. And I'd like you to speak to the new developments we're seeing playing out in that space. We're seeing Ukraine now is in talks with some of its partners to get an extension on the Black Sea Grain Initiative. How do you see this playing out?
Well, absolutely. These talks have been going on forever. You know, the deal was extended last year. It's due to run out really in a few days' time. Turkey and the United Nations and Ukraine, they're obviously negotiating with the Russians. It is in the Russians' interest to continue the grain deal because ultimately Russia needs as many allies as it can get. It has many allies in Africa, and their populations are the ones that are suffering from high food prices. So I think it's very likely that the deal will be extended, which will make the market feel happier, but we should expect some Russian concessions, particularly when it comes to Russian agricultural sector and exports. That is also critical for the world economy. But for the time being, if you look at wheat prices, they're down from those highs. We've got strong deliveries as well in Australia. Generally on the wheat front, it looks like we're past the worst, but we're still higher prices than where we were 2 years ago.
Yeah, but looking at some of the core soft commodities here in Africa, how would you rate some of the other threats we're seeing to output and the likely impact they could have on prices?
Well, we've already seen the enormous the impact that the increase in inputs had on African agriculture last season. If you think, I mean, the cost of fertilizing a field basically doubled for the average farmer. And there were many shortages as well because so much fertilizer came from Ukraine, Belarus, and Russia. That was disrupted. So then we saw a lot of lower yields. I mean, particularly we saw in Ghana as well the effects for the cocoa crop, which was much, much lower. But I think we've definitely seen internationally the prices for fertilizer are lowering. We've seen better supply coming in from alternative sources. But just like with food prices, it will take a while to trickle through into Africa. So I think this question of high input costs, fertilizer and fuel, that's going to continue to hurt the agricultural sector this season.
Well, that's it from West Africa. I must thank my colleagues Palesa and Sarah for the regional updates. And that's all we can take on this week's episode of African Business Weekly. Join us same time next week for more weekly business stories across sub-Saharan Africa. I'm Akion Bakeye. Thanks for watching.